to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open. So our weekly strategy roundtable open to talk about current market conditions and any questions you might have about your subscription. Let's make sure the light is better. Now you should be able to see my screen. Okay. Also, welcome on YouTube channel. If you guys are on YouTube, welcome. Again, any questions you might have, please type in inside of your YouTube channel or inside of the GoToWebinar. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. A little bio about myself. My background is technology. I was the CTO of Options Express, which was an online broker-dealer. Started in late 1999. Went public in 2005. At some point was worth over $2 billion. I'm very proud of that experience. I was their first employee. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to options, please go to optionsclearing.com for understanding risks of standardized options. Again, I'm not a financial advisor. I'm here to show you what I do in my own account based on my own risk tolerance level for general education purposes only. All right, before we get into the trading plan, let's talk about current market condition. We just had the Fed meeting. Not Fed meeting, but Jackson Hole, where different Fed committee members are presenting the information, potentially future guidance. Powell just spoke, and you can see initial reaction was neutral, but now it looks like the sell-off is accelerating, right? Because he basically reiterated that they're data-driven, but number one priority is price stability, meaning that inflation, target inflation has to be 2%, and they're going to continue raising until there is multiple data points that shows that inflation is under control. And apparently one data point is not enough. That's what they've been saying. So I think market a little bit mispriced, this idea of pivoting, right? That the market is going to pivot. So at least initial reaction is bearish. We're trading actually below this downtrend, January downtrend on QQQ, and 2-year yield continue to rise, right? We are retesting 52-week high. And so far after the Fed meeting, I mean, it spiked up, pulled back, but still kind of trading in the range. QQQ is down 2%. Dollar is actually pulled back significantly, which is, I think there is more interest spike in Germany and Europe. So that carry trade, but this is a positive reaction. So there's a mixture, right? We're going to have this dichotomy of, where certain correlations don't make sense. But at least as of right now, QQQ is down 2%, semiconductors is down 3%, spiders is down 1.25%. This is important support, right? We talked about this. Well, this is a short-term support from yesterday's low. So we had yesterday's low, or actually approaching August low, right? So August low is around 408 level. So this short-term previous week low is 411. I would watch this level. If this level doesn't hold, it looks like we're just retesting this level, still early, I would watch the 408 level, because this is kind of the range we are trading, right? We had a CPI print, right? This is a CPI data, better than expected CPI. So this is a better than expected CPI. We will basically close this gap, right? Which is, bearish, but that's the range we were trading prior to that. So this is the August range. Overhead resistance, we actually closed the gap prior to the Powell's speech, and now we are in the middle of the gap, right? So we can retrace to 420 by the end of the day. We can retest 408, but those are your main levels, right? If we drop below this level, then I think the sell-off will accelerate. If we don't break through this level, we will, we can move around, going into September, right? Going to September. I'm bearish going to September. I think we will break this level. It's just a question of time, right? Do we break this level today, or do we break this level next week, or after Labor Day weekend? That, I guess, we'll have to wait and see. Meanwhile, we are back to this yield inversion, right? But market is stable, yield is rising, right? Yield curve is rising, and then, when the market sells off, yield is flattening, right? Flattening, more inverted. So we are back to the 37 basis points, 40 basis points. I think yesterday we were close to 20 basis points. So everybody's watching that. That's kind of bearish short term for the market. What else? So dollar is the most important. That's slightly bullish for now. It's actually reversing back. And then, 2-year yield is retesting. That's also bearish. 3.5%, 3.45, and then QQQ down 2%. But risk off, right? Bitcoin is down. Gold miners are down. Google is down. Yeah, and I would watch mega cap. So Google is down 4%. Let's see how's Apple doing. It's an elephant in the room. That's actually doing pretty well. Apple is stable. That's good for the bulls. Microsoft in line with the QQQ, a little bit better. Tesla better. So okay, so mega cap technologies are still stable, so that's good. ARC Innovation dropping significantly. And then in terms of earnings, Affirm continues to trade lower. ARC dropping, NTAP, NVIDIA. It's kind of familiar price action, kind of risk off across all asset classes. VIX is a lot of complacency at 22. Metals and miners, Germany, so everything is dropping across. So risk off day. All right, any questions? All right, so again, very important. We're going to have this stoic theme, negative visualization, right? This is not something I came up with, right? This was introduced to us, millions of years, not millions, thousands of years ago. Futurorum, malorum, and premeditation. All right, so Latin. Okay, so back to Seneca, back to Roman Empire, Greek philosophers. They all had this concept of negative visualization, right? Unlike the general focus of creative visualization of inducing an imaginary positive psychological physical response, right? That's the most common response. We're always trying to paint positive picture. Our brain protects from the negative. Negative visualization focus on training the practitioner on the negative outcomes of realistic scenario to desensitize or create psychological fitness in preparation for real life losses, introduce feeling of gratitude over real thing or actual the practitioner has, right? So how do, why am I mentioning this? How is this relevant for trading? Well, when you trade, right, you have to go through both positive and negative scenario, right? Majority of traders do not know how to short the stock, right? 90% of traders, retail investors, do not understand how can you sell a stock that you do not own, right? So for that reason, it's very important to go through these scenarios, right? Let's say you think that this level will hold, right? Either 406 and 412. You have to decide what your target gain and what your stop loss, right? If you're a short-term trader, if market reverses, it is conceivable that the market can reach, at least retest 200-day moving average. We were there last week. It's reasonable to assume we can get to 431, right? Let's say you think that market is overreacting to the news and it will go higher. So you're buying at 412, right? Let's say you buy at 412 because you see this support, right? For short-term day trade, you think this or 406 level will hold, and you're targeting, 62% retracement, which is 20 points to the upside, right? So that's positive visualization. 9 out of 10 traders, that's what they're doing. They're looking at some kind of a support. Somebody on Bloomberg says, or CNBC, that market is overreacting. Potentially market can move 5%, and these are people saying that they are, have more experience than I do, right? So you listen in, you look at your support, you have your signals. Market is oversold by any stretch of imagination, so you're buying, and you only think about making 20 points. This is where the negative visualization has to take place, right? You have to determine position size. It's not so much as you're trying to figure out, prepare for the negative outcome. No, you just need to know what the position size is, right? So then that becomes, you see support is August low, right? We're within striking distance, 2% away from August low. That's your first level of support, right? Assuming this level, doesn't hold. So you can basically say, what? I'm comfortable with, that this level will hold. So my stop loss is, you're buying at 413, 406, 8 points, right? So you're risking 8 points to the downside. We might be there by end of today's session, right? Probably not, but maybe sometime next week. And you're not comfortable making decision when it's 1 or 2 days. So then you go back. The next level, if you break through the 406 level, well, there's a little bit support at 400, right? A little bit 400, but most likely we will revisit 390. And that is, now we're going back to end of July support, July high, right? Multiple times. So that's a much stronger support, right? Much stronger support, but you have to give yourself more room. And this is about 25 points, right? So you can say, you know what? I want to make 20 points, and I don't want to risk more than 23 points from 413 to 390, right? Support too. So that's your stop levels, right? So now you need to have a position size. I propose, again, make it process oriented, right? Part of the Stoic philosophy is that you derive pleasure, you derive satisfaction in the process, right? You live as, you can't become a Stoic just by listening definition of negative visualization. This has to become internalized. The only way you can internalize, you do this every time, right? Once you do this every time, it will be kind of innate and built into your thinking process. So visual negative visualization, you basically 23 points, so $250, right? The goal is for any disciplined trader to always risk the same amount. Doesn't matter what you're trading. You can buy futures, you can buy Bitcoin, you can buy the most volatile stock, meme stocks, probably the most, no, not the most volatile, but Forex. Probably Forex is the most volatile, and futures, options on futures are the most volatile instruments you can find, right? If you love volatility and you want things to move 100% up, 100% down, or 300% up, 300% down, there is appeal in that, no problem. But the risk should always be $250. You can buy the slowest moving asset classes, like, I don't know what the slowest moving asset classes right now, like prime rate or something like that, versus versus the most fast. But you always risking $250. What does that mean? your position size has to adjust. If something has to move a lot, you trade small amounts, and if something moves slow, you buy larger amounts, right? So you have to accommodate for that. It cannot be always, I always invest $100. You know, I invest $100 in penny stocks, or I invest $100, right? Because they're going to move in different percentages. You have to think about percentages. So if you're risking 8 points, $250, this is on a $10,000 portfolio, right? If it's $20,000 portfolio, it's $500, right? We're looking at 2.5%. So if you're managing 20,000, then okay, you can risk a little bit more, you know, $500 or $450, right? Maybe you say, well, on larger portfolio, I don't want to risk, yeah, but it's always the same amount. So if you're risking 8 points, right, we're still concentrating on $250. If you're risking 8 points, then you can buy 3 times 8, $240, 30 shares of S&P. And if you're risking 23 points, then you can only buy 10 shares, right? That will give you $230. So you can see why negative visualization is so important, right? Because you can kind of determine your maximum, what your exposure is, right? So if this is what trading is all about, nothing else, right? A number of positions, right? Because you have 100 positions like this, and they're all selling off, right? Everything is, you can see Amazon is down, Apple is down, Uber is down, you know, Nvidia is down, you know, there's nothing, you know, Workday because of the earnings is still up, but it gave up majority of its gains, right? You know, a firm is down 20%. So everything is trading high correlation. It's just position size is different. So for that reason, it probably doesn't make sense to have Apple, Amazon right now, Uber, you know, BMW, because they're all, excuse me, they're all selling off in very high correlation to each other. So 4 positions. I propose 4 positions because this way you know that 4 times 250 maximum exposure is $1,000, 10%, right? You were, you know, a lot of people were bullish going into this announcement. They, you know, the idea is that we will at least retest or actually break through this downtrend, right? Break through this downtrend. So you know, if you're bullish on this market, you're not alone, right? I would say 50% of the people probably bullish at this time. Then, you know, if the market, let's say, reverses and let's say it does drop, right? Well, the most you're exposed is $1,000, right? You will exit, you know, if you have 4 positions at stop loss at 406, then you exit all 4 positions at 406, right? Let's say they're all bullish. If you have 4 positions at 390, you exit all of them. The biggest mistake, if you buy 30 shares of spiders, right? And let's say today market reaches 406, you think it's extremely oversold. You always reverts to its mean, so you're holding this position. And then next week it approaches 390. Then you have a dilemma, right? Now you have 4 positions, and they are down $500, right? What do you do, right? And that's where usually you know, now you're down $2,000, 20% down on a $10,000 portfolio. What do you do, right? And that's very difficult to do because, you know, fight or flight response, right? You know, an automatic physiological reaction to an event that perceives as stressful or frightening, right? What is the trading all about? Especially, you know, it seems like we are still trading in the bear market. You can argue whether we are or not, is to avoid this physiological response, right? A lot of people ask me, you know, what is the trick to trading? What have you learned from trading in the bear market? You know, my response is always, you know, when market closes, I don't want to think about the market. You know, I don't want this to become my personality, right? You know, how do I do that? Well, you have to minimize this response, right? If I'm on the wrong side of the trade, you know, I'm probably not happy, you know, I'll be honest. But, you know, if I'm within 10%, then it's okay, right? I don't think about it, right? If I'm down 20%, then you know, during the weekend, I'm going to spend time, you know, thinking about, you know, I thought Fed will pivot, it didn't pivot, you know, what, you know, and et cetera, et cetera. So how many of you experienced this, you know, fight or flight response when you were trading? And how often do you experience it? That's the question. I'm gonna ask everybody. So Type in yes or no. Ellen, Andre, Bruce, Byron, David, Don, James, Kevin, Leland, Mark, Mason, Michael, Nathan, Osama, Paul, Peter, Rick, Robert. We have a lot of traders. How many of you have experienced this fight or flight? All right, yes. Okay, yes, we all did, right? And if you didn't, you probably just didn't trade long enough, right? Because the idea is that the idea is that you learn on my mistakes, right? If you learn on my mistakes and you can, always have 4 trades, 2.5%, you always get out, 10% is not a big deal. You can vary card and you never experience it. There's very small percentage of people, less than 1%, can learn on other people's mistake. Majority of the people learn on their own mistakes, and then there's still a lot of group of people that never learn, right? So if you never learn, most likely sooner or later you stop trading, right? You stop trading because the pain kind of unbearable, right? The part of Stoic philosophy is that you use these physiological reactions, pain. I mean, it's kind of one way to describe it as pain, and you lean into the pain and you learn. Your creative process gets kicked in, and then you find ways to kind of learn from your mistakes. So hopefully we're all either learning on my mistakes, but realistically you're learning on your own mistakes. And as time moves on, you will realize that the only way to deal with this pain is to go through this calculation or some kind of calculations like this, and you want to internalize. It's not mental stuffs. You actually have to journal, right? The only way to internalize the information, in my opinion, is to journal. You cannot internalize information if you just have mental stuff. Why? Because just the human nature, right? At least my belief, I could be wrong, but my belief is that you have to journal to internalize the information. So it becomes the second process, because otherwise, you do it 9 times and then on the 10th time you don't do it, and that's where your losses exceed your gains. So you have to journal. You have to document all your trades, right? Document all your trades in your journal. And you have to grade yourself, right? Objective information, right? Grade yourself, and you put A and B if you follow the process, right? You're a Stoic philosopher. You practice Stoic. You don't just listen definition of Stoic, but you practice. Then you're A and B. If you're not a Stoic trader, then you put C and D, right? Because sometimes the outcome is more important than the process, right? And the idea of another Stoic concept is, I read these Stoic books, love it. Dual dichotomy of control, right? Another Stoic concept, extremely important to trading, which again, this was done 2,500 years ago. This is not something I came up, or this is not emotional intelligence that we started defining 20 years ago. This is engraved in our DNA, right? This is engraved in human, mentality. Is separating things that are within your control and things that are outside of our control. Here's an example. Things that are within your control, your thoughts and your actions, and things that are outside of your control is everything else. How does it translate? Outcome of the Jackson Hole meeting is outside of our control, right? Market could have rallied, market could have sold off, and you can see that in the two-year yield, right? It's all over the place, right? You look at when the Fed start talking, right? It's down, going into the meeting, it's up, now it's reverting. So it's outside of our control. You don't know where the 2-year is going to end up. Will it be at 3.5? Will it be at 3.3? Will it be at 3.8? It's a binary event. It's outside of our control. You can have an opinion. You can say, well, I don't know why Fed will pivot. I think they're just going to stay hawkish, and hence interest rates are going to go higher. Totally fine. You can have that opinion. You can invest money based on that opinion, but you just don't know. What you do have control is your thoughts and actions, right? You can have a control over your thoughts and actions. Action is number of position size, and how much cash you have. And based on your opinion, you're making sure that if you do invest, if the trade's going against you, you're not going to lose more than 4%, 2.5% per position. So those are very important concepts: negative visualization, fight or flight response, dichotomy of a control. There was a fourth one I was talking about. What else is important? Process versus outcome. That's still I think it's good enough. 3 is, research shows that during the 1-hour webinar, you cannot get more than 3 concepts, right? So I don't want to overwhelm you. If you want to remember 3 things that will make you a better trader: negative visualization, positive visualization should be done at the same time. What is a fight or flight response? How to avoid this? And what is the dichotomy of a control, right? So those are the 3 topics. I would take a screenshot, write it down, and you have to practice it, right? You have to practice it. It's not something that's just going to happen overnight because you listen, right? The only way to become a stoic, it's ideology, right? You have to practice it, right? In trading, it's the same thing. If you don't, you can think about it. You know that stop loss is important, and you know how to calculate it. But if you don't practice it, if you don't do it every time you trade, well, then you're not a stoic trader, right? You want to be a stoic trader. That means you have to do it. And I don't like doing it. Actually, I have a 16-year-old girl. I'll tell you a story, and she, she's stressed out. She's a junior in high school. She's taking all these AP classes and AP chemistry, BC calculus, all these statistics, and she's overwhelmed, right? She's stressful and she's losing weight, significant loss of weight. So I told her, okay, right, you don't want to eat, but the only way you can make it, well, first you have to make it a priority, but you have to count calories. And there's a lot of apps that you can enter all the information that you eat, and just tell her at the end of the day, send me the calories that you eat, whatever it is, 500, 700, 800 calories. It's actually surprising that somebody like me can have a kid that actually, struggling with weight gain, not weight loss. But anyway, she's like her mother, but it doesn't matter. But the point is that it's a process. Every day, every time you eat, you record number of calories, right? There's apps, million of apps. And then at the end of the day, I'm asking her, just take a screenshot of today and tell me what you ate and how many calories. And she's like, why do I need to know this? Like, just leave me alone. I'm just going to eat and that's it. And I told her, unless you count in calories, you have no idea how many calories you're eating. And you have to set goals, right? Today you eat 600 calories, tomorrow 650. Then, week from now, 675. You have goals, you document it, and then it becomes your life, right? It becomes your innate process, and then you will follow it, right? So unless you do that, it's very hard to gain or lose weight, right? Unless you count your calories, how many calories you're eating. Same thing, the exercises, how many push-ups you're doing. Now there's apps that tell you at the end of the day how much. It's easier, right? There are apps that tells you, like Aura. I have Aura. It tells me at the end of the day how many calories I lose. How many calories I eat, I don't know, right? Aura can't tell me this, so I have to document this. And I have to grade myself at the end of the day. So those are the 3 topics that very important, and hopefully we all can be stoic traders. How does Tradespoon help you? And first of all, any questions on market? Okay, so important market. So let's go over the market again. QQQ just broke downtrend. Spiders, I think, broke. Continue. Okay. So again, going through both positive and negative visualization. So let's go over this again. We'll do an example. So we have October, right? Next, we're end of September and next 30 days, right? Close your eyes and you basically say, okay, one idea that we will break through this level, right? That's scenario number 1 by October. Scenario number 2, we don't break this level, we're stuck in this range, right? Between, 430 and call it here, right? The third scenario, we break through this and we are trading, below 400. So how many of you say by end of this October, we're going to be 1, 2, or 3? So let's go through this exercise. So type in 1, 2, and 3. Okay, so we have 3, 3, 2. Okay, so mostly 3 and 2. Mostly of you said 3 and 2. Okay, it's actually interesting. Yesterday, when I did the same question, more than half said 1, right? So again, being self-aware and documenting, then you realize that it's a herd effect, right? You're following the crowd, right? Yesterday, market was going higher or here, everybody said 1. Market today is down, everybody says 3 and 2. It's a problem, right? You can't chase the market, right? You have to have an opinion and stick with it, right? If there is you have to be flexible. If certain information is presented, you have to change your opinion, but you cannot change your opinion what's going to happen 30 days from now every time market moves up or down, right? You're going to have hard time making money, right? So just an observation, it happens to everybody, but the idea that it's impossible. You either think 1, 2, or 3 by end of October, right? You can't change your opinion every day based on the price action. You can change it based on maybe CPI data, PPI data, interest rate, whatever. You should be flexible, but you cannot be. If the market is up today, then you think we're going to be at 1, and if the market is down today, we're going to be at 3. You have to be consistent in your opinion. All right, so thank you for sharing. The second question, right? This is by, we're talking October, right? Let's talk about year end, right? Year end, right? Same question. Are we gonna break through this above, 1? Are we gonna be stuck in this range year end 2, or are we gonna? Well, there's 3. 3 is we're gonna trade between the low and this level, and 4 we're gonna break the lows. Right, so I'm going to introduce 4, right? So year end, we're talking about end of December. We're going to break through this level. We're going to be above it. 1, 2, we're going to be in this range, stuck in this range. 3, we're going to break through this level, but trade somewhere between 406 and 360. And 4, we're going to break below 360. So how many of you say 1, 2, 3, and 4 by year end? 1, 3, 2, 3. Anyone else? 2. Three. Okay. So on the first one, so by October, I'm gonna put down 2, and by December, so October, I'm gonna put down 2. December is hard to say. It's not 4, it's either 2 or 3. I'm gonna put down 2. So by October, I think we're gonna be at 3. Sorry, my answer by October, we're gonna be 3. We will break through this level by October. December, I think we will rebound, so I'm gonna put down 2. So my answer, October 3, December 2, and then I'm gonna go out in March of next year. Same question. Are we gonna break through and make all-time highs or approach all-time highs by March? or are we going to trade in this range too? Or are we going to trade in 3? Well, here it's probably irrelevant, right? You don't know. Better questions, I think, is 1 by March, right? By March, 1, 2, or below 3. We're either going to make new highs or approach new highs, or we're going to be in a range between 440 and 360, or we're going to break below, significantly break below lows. So 1, 2, and 3. 1, 2, and 3 by March. All right, 1, 2. Anyone else? I'll give you a little bit more time. One, 2, or 3. All right, a lot harder, a lot less people are responding. Okay, I'm going to put down 3. Right, I think we will break through the lows. Right, we'll break through the lows and trade lower. Right, so I think drop to October, rebound, rally again. ABC. Remember, there's always ABC patterns. Right, this A, B, C, and then below. Right, so that's my core scenario. My core scenario would drop 390, 380. We rebound, either retest or a little bit lower, right? And then we see, and then by March, we break below this level. All right. All right, so how does yellow Tradespoon can help you with this process? Again, you can, we have different services, right? We're promoting right now shadow service. Shadow service, both shadow service and elite service are 2 services where you can participate in a live trading room. We have morning bell and closing bell. You can view recordings of all of our trading sessions, and you have real-time access via SMS alert or trader log. You can always log in and say, what are the orders today? Or what are the orders in the last 7 days? What are the current positions? So you can see some of the trades. It's a combination of stock and option trades, right? NTAP, looking for 0.5% profit, right? NVIDIA using options, looking for 0.5% profit. So again, compounding investment. Another topic that, this is the 4th topic, compounding investment. Finance or trade. What's the definition of compounding investment? What is compounding investment? Compounding is the process in which the asset earnings from either capital gains or interests, right, trading or interest, are invested to generate additional earnings over time. This growth calculated using exponential function occurs because the investment will generate earnings from both its initial principal and the accumulated earnings from preceding periods. Compounding therefore differs from linear growth, where only the principal earns interest period. Compounding is the process whereby interest is credited to an existing principal. Compounding, blah, 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 blah. Okay, so the idea of compounding investment in finance or in trading is that your returns accumulate, right? So, here's 4 trades. I did NVIDIA, I did Russell 2000, JD, NTAP, 4 trades, let's say, in the past 7 days. So you have, and that's a very important calculation, right? So you have to first figure out your system, right? So my system has been accurate 75% of the time. So it means 3 out of 4 trades are successful. 25% the trade goes against me. So very important, whatever system you're using, you have to know what's the winning rate, right? And it's repeatable. You have to look at somebody's performance of actual trades or backtest trades and just see over historically, whatever the system you're using, how accurate it has been. Then does it mean it's profitable? No, it means that if you have 4 trades, right? If you have 4 trades, the idea is that the 3 of them will be successful, right? And 1 would be unsuccessful. And your goal that the 3 successful is greater than 1 unsuccessful to continue growing money, right? So that's where position size is important, and always follow your stop losses and not risking more than $250. Right? Let's say you know in 3 trades you made 0.5% profit or $250, right? However you're doing this. And one you're down, let's say even 1%. Let's be more conservative. So 1 trade went against you, you're down 1%, 3 successful, and you're made 0.5%. So overall, you're still positive. Overall, as long as you're consistently, iteration over iteration, consistently making money, you are up 0.5%. Let's say you do 4 trades a week, right? In 1 week, you're up 0.5%, right? Let's start from the beginning, 0.5%. More conservative, right? Even though you know some of these, like Nvidia, this is 9 out of 10 trades are successful. But let's just show the point. It means in 1 month, right? In 1 week, in 1 month, you multiply this by 4, you're up 2%, right? And then in 1 year, you're up 24%. I mean, if you're up 24% in the bear market, you're a superstar, right? You are top 5% of traders, right? So this is a conservative approach, and this is reasonable to a assumption, right? And then you set the goals, right? You treat trading as your business, and every time you set the goals, right? You do this for a couple of weeks, you got 0.5%, okay, target 1% gain next time, right? I mean, still, I would not do it at the expense of the trade size, but you can trade more often, right? I mean, I did more than 4 trades in the last 7 days, right? Sometimes I do 4 trades a day, right? So this is how you can increase. You can also say, 0.5% is not enough, I'm going to look for 1% gain, which is totally fine. You just, instead of selling, 215, what did I sell? Instead of selling, 146 put, right, or 192.5 put, I could have sold 190 put, call, and I could have sold 148 put, and probably would have got close to 1% gain. But I'm increasing return on capital, and we know there's no free lunch, at the expense of probability of success. That's all that is. So you can change your system. I'm telling you what my system is, but I'm managing larger portfolio. So if you're managing smaller portfolio, or you are very aggressive as a trader, okay, then you look for 1%. You just come, you look at the bell-shaped distribution curve, and if I sell premium here, you sell premium here. All it means is that you're going to be wrong more often statistically than I am, but your returns are better. So your returns are better, but your percentage of win rates is smaller. That's all it means. And in trading, unless you have some kind of alpha, using super technology, for average retail investor, this is the offset, right? You either increase your probability of success or you increase your return on capital. So that's Elite Service. You can follow my trades. Same thing with Shadow Trader. You can follow the trades every time. The difference between Elite Service, you also have these other ideas like Active Trader, Weekly Trader, and Monthly Trader, right? Every day, Active Trader will give you, here's the list of stocks that we think is going to outperform the market, right? And then Weekly Trader, Monthly Trader. Shadow Trader doesn't have it, but if you need more ideas, or you're self-disciplined, you've been trading long enough, or you want Stock Forecast Toolbox, right? Stock Forecast Toolbox is a very powerful model tool. It kind of detected that we're going into the Fed with neutral trend. It sees that range is 415, 423. We are below this range, right? We're below this range, so market sell-off is probably gonna accelerate. All right. Any questions? So SPY is down 2%, QQQ down 3%. My portfolio right now is bearish. So when Spiders is down 2%, my portfolio is up 1%, right? So I was bearish into this event. I ended up on the right side of the trade. I'm going to remain bearish into October, right? I'm going to remain bearish into probably end of October. I think, there is more room to the downside, and I think core scenario would test 390, right? Core scenario would test 390 by end of October. Worst case scenario is 370. I don't think we're going to break the lows. This is a pretty strong rally, right? There's, earnings is better than expected. Fed did not say anything we did not know, right? It's just, I think people were too optimistic, and now they, realism is kind of kicks it in. But nonetheless, I think 390 will hold. This is the worst case scenario. This is the core scenario by end of October. That means, if you're bull, you probably want to be out of those 4 positions. I would say if you're very bullish and you say, Vlad, you have no idea what you're talking about, then I would say 2 bullish, 2 negative, right? I would not be overly optimistic. I would have some bullish, some bearish position. If you say, Vlad, it kind of makes sense what you're saying. I'm in your camp. Then I would consider, 3 bearish position and only 1 positive, because we might revisit this level, right? September CPI, if it's better than expected, very quickly we're at 430 again, right? So something like this. There's no wrong or right. It just depends on your opinion, your belief, or a lot of it is your psychology, right? It's very hard for people to be bearish because innately we've been conditioned to be bullish in the past, since 2008. So I get it, so you should always, you should never, I would never be all bearish, right? Going back to the game theory, right? We'll leave it to the last idea, game theory. Right, coordinate game, right? Coordination game is a type of simultaneous game found in game theory. Describes a situation where a player will earn a higher payoff when they select the same course of action as another player. Trading is, if you don't understand game theory, you don't follow game theory, you cannot make money in the market. And it's not something I said. This is very, well-respected traders and money managers that have stated that. So you have to embrace this idea. It's very simple, right? Left, right, bull, bear, bull, bear. You never want to be always bull, and you never always want to be a bear. You want to be in the right coordinate at the right time of the market conditions. But you should never be all bullish. You should never be all bearish, right? You should have some bullish position, some bearish position, and figure out what the right mixture is based on the idea. You try not to predict what you're think the market is going to do, right? It's irrelevant what Vlad thinks. What's relevant, what majority of the people think, right? I'm trying to make when I tell you my opinion, it's not my opinion. Because I have biases and whatever. This is what I think majority of the people think, right? Going into the Fed meeting, I was under the impression that majority of the people think that the market rally is overextended, Fed will probably not pivot, and it will pull back, right? But that doesn't mean it's my opinion. In trading, it doesn't matter what my opinion. This is what my perception, what majority of the people think, right? So this is the 4th thing that hopefully you guys can take out of this presentation. All right, that's all I have for today. Thank you very much. Have a great day. Have a great weekend. I will see some of you at the closing bell. Consider joining us at Elite Service. 2 announcements. First of all, YouTube. Let's see. Let's see who's watching us. Not sure, but okay. So we do have live session Monday, Wednesday morning, and closing bell. So please join us on YouTube. You can participate without any commitment. You don't have to pay. You just try the live trading room morning. Wednesday morning, Wednesday closing bell. You can subscribe if you like the content. Well, hopefully you can subscribe, or if not, at least share it with your other community. If you're part of any forums, trading forums, I would greatly appreciate it. Spread the word. It's a very difficult market, so having another opinion is important. If you like my thought process or you like my opinion, just share it with your anywhere you trade. A, you're going to help me, and then B, you're going to help those traders. Hopefully they'll benefit from the analysis the same way. So that's Yellow Tunnel. Thank you for YouTube, if you guys watching. And then again, I'm part of this gate.org, Gate, G-A-T-E. G-A-T-E. This is a nonprofit organization. I'm going to put the link. It's a nonprofit organization. I'm on the board. This is, the war in Ukraine not only affects, people in Ukraine, it affects everybody in the world, right? It affects Europe. They're most likely in recession. If Europe is in recession, then the United States might be in a recession, right? So the war affects everybody, but mostly it affects children. I was born in Kiev. I have family there. There are millions of families that are displaced, that don't have their house anymore, don't have food on their table. They're having, they're in, depression, right? They cannot balance their budget, Ukrainian government. So they need our help, So this is a way to donate directly to Ukrainian families, where you can pick the family and, you actually get a thank you note saying that, thank you for everything you guys do. You can read these thank yous here. So it's a great cause. If you're able, any contribution would be greatly appreciated. All right, that's all I have for today. Thank you very much and have a great day.